My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Right now, the market's in the grips of two issues. It's the virus versus the vaccine. And it's Biden versus Trump.
Trump stock, Trump stock.
Both of which are going in surprising directions. If you thought the election was over, the president's fighting tooth and nail to try to do an end run around the results. These mysteries are roiling the market, including today, where the Dow lost 220 points. The S&P declined 0.68%. And the Nasdaq dipped 0.42%.
The House of Pain.
I mean, I know it didn't feel like 0.42 was so bad, but if you were in the Nasdaq, except for a couple of names, wow, they really crushed it. So why don't we start there with next week's game plan? On Monday morning, we're going to come in, and sadly, I'm going to bet that we pass the 200,000 mark. That's right, 200,000 cases a day. It's a devastating number that will cause consternation about how the virus is hurting business. If not Monday, then Tuesday or Wednesday. It's really, of course, just a question of when, not if. Now, I know there's a sense that we've had a big V-shaped recovery, which is terrific. But our inability to stop the spread is putting a crimp on business orders and retail sales. Just yesterday, Workday reported a solid quarter. Remember, we had the co-CEOs on the show. But they mentioned on the conference call that they can't be sure about the near-term picture for orders because COVID's out of control. Suddenly, a stock that was up $12 U-turned and got crushed, finished today down $21. Now, without another big stimulus package, it's going to be a very tough winter. At the same time, we still don't know when we're going to be able to get vaccinated. It doesn't seem like there's a plan, just a bunch of rumors, which is unfortunate because we need to prioritize healthcare workers and the people who are most at risk. But you know what? It's up to the states. States don't have any money, and they don't have any organization. The market's been able to weather this horrific outbreak because we know the vaccine is on its way, though, and that's thanks to the good works of Pfizer and Moderna, two private companies. But without some clarity, there's a chance money managers are going to start freaking out about the near term. And that's what you have to worry, that they're going to freak out and they're going to dump stocks. Now, see, I'm betting the vaccine ultimately wins out. Emphasis on ultimately, though. In the meantime, more than 1 million new COVID cases per week can drag things down, especially when you consider that over 250,000 Americans have already died from this disease. And if that wasn't enough uncertainty already, we still need to worry about the election. Joe Biden won, but President Trump refuses to concede, and he's going to great lengths to try to overturn the results. He says he plans to prosecute the voter fraud claims to the fullest, and more than 70 million people voted for him, and I'm sure a lot of people feel, yes, please do. The Bulls are hoping that high-level Republicans will urge Trump to throw in the towel. But the president apparently believes he's on a roll. And the Bears expect a barrage of new allegations when we come in on Monday, not to mention a power play to get the Michigan results thrown out and a new dispute, or at least the way to frame a dispute, in Georgia after the hand count. That apparently is going to come, too. Even if he somehow manages to pull both of these off, he's still going to need to flip another state in order to win, which is incredibly unlikely. But, man, the markets hate uncertainty, and right now we're getting a double dose of it from COVID and the unconceded election. More on that later in the show. But if you notice, you see President Trump's headlines far more than you see President-elect Biden's headlines. Tuesday, a huge earnings day. Unusual for the week of Thanksgiving. We start with Best Buy. That's a red-hot stay-at-home stock that's been cleaning up thanks to the pandemic. I think it could be a blowout, meaning there's a good chance Best Buy rallies on the news. Here's a quandary. What to do with Dollar Tree? I keep thinking they're about to have that breakout quarter, but then nothing happens. The gains have all been with Dollar General, their arch rival. This one's too risky to buy ahead of the quarter. I know a lot of people are tempted. Hey, how about this? Foot Locker delivered some terrific numbers today, yet its stock got slammed, in part because it had run into the quarter. You know, I fear the same thing's going to happen with Dick's Sporting Goods on Tuesday morning. It's coming in too hot. The discount chains had a good run this week, and the last one report should give you more of the same. That's Burlington Stores. It's been a consistent winner, and I bet it maintains that tradition. Next, we hear from Medtronic, and the wrap is that maybe sales could be a little light because this is a medical device maker, and a lot of people are postponing operations because of the pandemic. They don't want to get COVID by going to the hospital. I'm worried about that myself. But if Medtronic gets hit, I'd be a buyer because the vaccine, yes, it's coming. Then there's some foodie days, too. I mean, there's Hormel Foods. When COVID infections first screamed higher in the spring, the packaged food stocks screamed higher, too. My guess is this happens again now that the restaurants are being shut down again. Smucker reports, too, but unlike Hormel, it's been wildly inconsistent. With a curious assortment of companies, like it's got Jif peanut butter, it's got Folgers coffee, Smucker's jams, and then Milk-Bone and Meow Mix. I don't know. I mean, I think Smucker's ready to play catch-up, although I still prefer the consistency of Spam, the food synonymous with Hormel. We also get reports from 3 tech companies that I like very much. There's Analog Devices, VMware, and VMware's parent, Dell. Now, I know Workday put a scare into us about what COVID means for tech, but I suspect all 3 will have a better idea now, after what happened last night, how to explain the obvious without freaking people out. And believe me, I think Aneel Bhusri, the co-CEO, was just stating the obvious. There's COVID. Come on. ADI, Analog Devices, is a fabulous Internet of Things business that the bulls will love. Dell's been a horse. However, VMware's been a bit more up and down. Right now, it's up, so it really has to tell a great story. Earlier this week, Kohl's posted a seemingly suboptimal number until you remembered that Wall Street had very low expectations. Turns out Kohl's is doing better than those expectations. I wouldn't be surprised if we see the same from Nordstrom on Tuesday afternoon. It's called BAF. Right? It's better than feared, BTF, but I also had it as BAF, but whatever. Trust me. Next, we got to talk about something. Speaking of acronyms, this is my absolute favorite of all of these. Beyond the other, it's reported. Remember last week we talked about the lag trade? No, not LaGuardia, the ticket. Like, no one goes to planes anymore. Anyway, lag. This is an idea we stole. We got from JP Morgan's Matt Boss, the best retail analyst in the business. Lag stands for 3 stocks that he likes: L Brands, American Eagle Outfitters, and Gap. L Brands just reported some amazing numbers thanks to its Bath & Body Works business. Hey, in a pandemic, people like soap. I say press the lag bet. Buy some American Eagle Outfitters and Gap before they report on Tuesday night. I know what you're thinking, that these are tainted brands, but they both made remarkable business comebacks, and I think you're going to see the fruits of that when they report their earnings, and people are still late to the party, and they want in 16. They want this one. This one goes much higher. Hey, I saw Banana Republic ad the other day, apropos of nothing. Finally, on Wednesday morning, Deere reports. The Feed the World theme has been tremendous, and prices for the whole agricultural complex are skyrocketing. And that's the ideal time to buy the stock of Deere. Now, this one is a bit of an odd duck. The stock's rallied almost 50% for the year, yet I still expect an upside surprise. If it pulls back, remember that Deere's a textbook play on President-elect Biden ratcheting down the tensions with China. Meaning you'll get a pop anytime you hear about some new accord with the Chinese Communist Party. It's going to be a big deal. I do this every year, and it never works. So you put your hand down like that, and it doesn't work because it's called a thing called the telestrator. So what you have to do is you have to go this, and these represent your fingers, and that's your thumb, okay? Because I'm a child. Now, on Wednesday marks the beginning of a very seasonally strong period, this day, right here. And so if you believe history will repeat itself this year, as it often does, then you might want to get long the whole market. On Tuesday, get ahead of this. No trading on Thanksgiving. And, of course, Friday's like the greatest day ever. All right. Bottom line, once we make it through the push and pull of the virus and disputed election next week, it's back to buying the up stocks. Oh, the up stocks. Hey, did you notice all the up stocks were up? I'm not kidding. I mean, in a really down day. It was like, wow, they're up. How did he do that? Well, presto. Just kidding. The companies do it, not me. I talked about these yesterday. These are the anointed winners for 2020 that should keep winning until the end of the year. And yes, I mean, someone said to me, Jim, do you still like them today? I wrote this 18 hours ago. All right, let's go to Eric in Michigan. Eric.
Hello, Jim. Thanks for taking my call.
Of course.
I bought Home, ticker symbol HOME, back in the summer around $9.
Yes.
It ran up to $22 and came crashing down after their pre-earnings announcement a few weeks ago. My question on Home is, do you think that will be a good stock to own after we return to normalcy, or is this only a COVID play? And do you see the stock going higher next year?
I think that it's between a COVID play and something that I would describe as not as good as Wayfair, but better than that. Now, Lee came on the show when the stock was at like $5. I think the stock has like $5-6 upside, but I'm not crazy about furniture, just so you know, except for if it's William Sonoma. How about Ted in Washington? Ted!
Jim.
Ted.
And a sad booyah for your Eagles.
Well, you're presuming that we're necessarily going to lose this weekend. I think we're going to crush Cleveland.
I hope so.
Okay.
First time, long time action alerts member. And first of all, I want to thank you for all your help you've given us over the years.
Thank you.
And so this past spring, we started talking about how people were buying RVs, motorcycles, boats, ORVs, etc. And then we had the jump in home sales, often first-time home buyers. And then lately we've had the new and used auto market going crazy. You've provided us with various ways to invest in these: Camping World, Brunswick, Lithia Motors, and several others.
Yes, love those.
It seems to me that all these things will need some kind of insurance. So I did some research on Allstate and Progressive. I chose to open a position in PGR and have added to it a bit over the last couple of weeks. Since PGR is reporting next week, I'm curious what your thoughts are on my theory and my investment choice.
Interesting. I'll tell you one thing. On Sunday, I do not want to be at home with Baker Mayfield when the defense comes to town. Coach Schwartz has got something ready for him. I think Progressive is just a classically great company. I felt that way for many, many years. When I was at Goldman Sachs, it was the only insurance company we ever recommended other than Chubb. So I think you're going to be fine. Let's go to Jaime in California. Jaime.
Booyah, Jim.
Booyah.
This is my question. I would like your opinion on Urban Outfitters ahead of its earnings on November 23rd, and your thoughts on consumer demographics. Is it a buy or sell?
All right, this is very tough because Urban does report on Monday, so I don't want to stick a gun in my head because I'd say take that gun away from my head. But I will tell you this. I am a believer in what's going on there in terms of fashion. But I also think that now all these stocks have run up because we saw such big gains after Target. So Urban is now in the danger zone. I think they'll do well, but the stock's had such a big run, I don't know if I want to be there. All right, look, the market's in the grips of the virus and the election outcome. But once we make it through there and go through the push and pull, we go back to the anointed winners. Don't forget, this is, where's Val the Impaler? Okay, remember this one. Right? This is Todd McKinnon, who is just like Liam Neeson in Taken. On Mad Money tonight, with the holiday season fast approaching, I'm sitting down with the CEO of Zebra Technologies to find out how the company's uniquely positioned to benefit as more people shop from home. And it's also amazing when it comes to getting the vaccine to you. Then, with Thanksgiving less than a week away, I'm going to sit down with William Sonoma's top brass to find out what the company's cooking up and talking. I'm going to take a closer look at its earnings, of course, which were blowout. And COVID cases continue to climb. But with news that Pfizer has filed for emergency use authorization for its vaccine and the FDA considering it maybe December 10, what does it mean for ventilator maker ResMed? I'm talking to the CEO. Find out where they stand. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.